Sometimes price ignore order blocks, which most traders use as their entry models. In this video, I'm going to show you how to use breaker block and Quasimodo reversal entry, right? When you have understanding of multiple entries, you're no longer going to miss trades, because we can have a situation like this where, let's say, price is trending this way, right, to the upside, and all of a sudden we get a change of character down here, right? Now, a lot of traders are going to wait for price to, get to this order block that sponsor this change of character. But oftentimes, price might not really get to this zone, and price might just maybe react somewhere here and just keeps going, right? Keeps going down. Meanwhile, this person is still waiting for price to get to this zone before he can take his or her first trades, or maybe he's waiting for price to get to this zone again before taking the second trade. Price might not necessarily come to revisit these zones, right? And it might just keep going down. That's why you need to have a good understanding of breaker block and Quasimodo entry in a trending market, in a market that's trending aggressively, right? So what is a breaker block? What is a breaker block? Now, in a breaker block, failed order block, right? A failed order block. Let's say we have price going up this way, right? You're going to agree with me that this zone right here is the order block that was responsible for this push to the upside. And now we have a change of character here, right? We have a change of character here, right? And you're also going to agree with me that an order block also was responsible for this as well, right? Now, in a situation where price move this way, right? Instead of reacting to this order block and move to the upside, price then decide to, break this order block, right? Break this order block. Now, in this scenario, price might not, go all the way up to test any of these zones, depending on the momentum that price used in breaking this zone, right? Now, if the reason for this break was due to fundamental analysis or fundamental reasons, let's say a news or something like that, or maybe just high impact news, right, responsible for this break, you're going to believe me that price will not come all the way up to this zone to fill up all of this demand zone, or sorry, all of the supply zone, and the fair value gap and all of that, right? Price is just going to quickly react from this zone here and just continue selling, right? Let me push this down a bit. Like, let's say something like this, or let's say price even react from this order block, right? Price is going to get to this zone here, right, and just keep selling down, right? Now, what is this zone? This zone is what we refer to as the breaker block, right? Why is it a breaker block? It's a failed order block. This was the order block that was responsible for this break of structure, right? But price has taken it out, right? So it is no longer called an order block, but a failed order block, a breaker block, right? So oftentimes price will come, react to this order block, this breaker block, and just keep going down, right? And most of the time, price will react to a breaker block just once, right? So you don't expect price to always, come back to the breaker block and just keep reacting, right? Probably next time price is coming to this zone, it might just take it out, right? Fill up all of these supplies and the FVG around this zone, right, before another push to the downside, right? We see price do that all the time. So in simple terms, this is a breaker block, right? Now, but there are certain rules that guides a breaker block, right? So just quickly look at the rules and go to chart examples, so that I think I have a beautiful, I can see a breaker block playing out, giving us a good trade here already, right? So I'm just going to give us the rules, then we'll check out the chart examples, all right? Like I already said, the number one thing to note here is price needs to be trending really high, right? Price needs to, be really bullish or really bearish, right? For this breaker block to work, price really needs to be bearish or bullish. Now, the reason behind this is, when it is clear where the market is trending, right, in a very, very aggressive manner, a lot of people knows that the market is not going to retrace to this zone, to these zones, right? They know market is not going to come back to this zone here. Let me pick this up. Let me pick demonstration. They know price is not going to come down to fill up either fair value gap, imbalance, or this other block, right? So they are just going to aggressively jump into the market using the breaker block here, right? And most of the time, they'll get a good trade down to there. to the downside, right? So you need price to be trending aggressively and or either to the upside or to the downside. Now, the next thing we want to look out for is there has to be, a sweep of liquidity. There has to be a sweep of liquidity before the breaker block, right? In this scenario, we no longer refer to this zone as a BOS. Of course, it's a BOS, right? For the bullish trend that just ended, it's a BOS. But then we are going to refer to this zone as a sweep of liquidity, right? Because price actually took out this transactional liquidity here before eventually breaking this order block, right? So price took enough liquidity from the upside before eventually breaking this order. It was the momentum from this zone that was responsible for the break of this zone, right? So there is a sweep of liquidity. So you want to know, or you want to be sure there is a sweep of liquidity before you consider that breaker block. And the next thing you must know is there has to be, a reversal after the breaker block, right? There has to be a quick reversal after the breaker block, just like I did here, right? You don't wait for price to maybe do something like this, just keep going down, just keep trending all the way down, before you eventually, before you mark out your breaker block. If price ignore this breaker block after this aggressive break, when price eventually returns to this zone, we are not going to consider it, right? Although price is going to respect it, yes, but it should just be for a scalp, right? Except you're a scalper, right? Except you're a scalper, then you can just quickly just get it. Maybe a 1:1 trade here or a 1:2 trade, depending on your trading strategy, right? But if you actually want to ride a trend, you would expect price to just react from this zone immediately. So once you get this break to the downside, you already place your sell position here, right? Your sell position here, and you ride the trade depending on your risk to reward, right? You set your risk to reward and you get a good trade. Yeah, so this is the next thing you want to consider is, like I already said, you wouldn't want price to, visit this zone twice, right? You wouldn't want price to visit this zone twice. After this first reaction, you no longer consider this breaker block, right? So once this breaker block is retested, we no longer consider this zone as being as valid, right? Because if price comes back here, the possibility of price. Now, the reason why we don't consider it is because remember, after this first touch, price has taken lots of orders from here already, right? It means there were lots of traders that were willing to sell from this zone, and price took the orders and reacted nicely downwards, right? So if price eventually come all the way up, to test this zone again, it means there are less orders compared to the first time that price retested, right? It means there are less orders. And because there are less orders, a market is always after liquidity. Market can just do something like this, just a little manipulation here and just head for this order block, right? Just to get more, liquidity before eventually maybe continue the sell down or react to this order block here and just keep moving to the upside, right? So this is what price is always going to do. So that's why when we have the first retest, we don't consider the second retest, right? Because it makes it weaker on the second retest, right? Now, so let's quickly look at chart examples so we know what we are dealing with and how to identify them on the chart. All right. So if you agree with me, this is a trendy market, right? The BTC was actually, sorry, this is GBP USD, right? This is GBP USD. You can see that price started selling all the way here, all the way here. You can see, okay, this is a break. This was a break as well. And this was the ultimate break. Yeah, this was the ultimate break. And more breaks. So this is a perfect downtrend, right? This is a perfect downtrend. You see price, GBP USD was actually trending nicely to the downside, right? And all of a sudden, price decided, so this was actually the low. This was actually the main low that was responsible for this break, right? This was the low that was responsible for this BOS, right? To the downside. And then we saw that price actually, what did price do? Price came and took out this low. And remember, we already said this is supposed to be a protected low. This high, not a low. Remember, we said this high was supposed to be a protected high. Why? Because it created a low, right? So if price takes out this high here, this lower high here, it means there is what? There is a change of character, right? So this is a change of character, right? Because a lower high that was responsible for this break has been taken out, right? So you already know that this zone right here, price has indicated it's going to trend to the upside, right? So this is, you can label your change of character. I know some of you are going to consider this zone here. Where is it? Maybe this zone here as your change of character. Yeah, you're going to consider this one as a change of character. It's still okay. If you go to a lower time frame, if you go to 1 hour, it's going to actually give you a valid change of character on 1 hour, right? But on on the 4 hour, I like my lower high to be V-shaped. If you're on this channel for a while now, you should know that I like my highs on my lows to be V-shaped. I don't want my high to be just one candle, right? I just want it to be V-shaped, right? It's more reliable, right? So when immediately price took out this lower high, I already knew that okay, GBP has changed trend, right? GBP has changed trend. So what do I do now? Remember I told us that this was the high, this lower high was responsible for the last push to the downside, right? So it means the order block here was supposed to be, a valid order block, right? But look at what price did. Price took it out. Although price reacted to this order block and give a good sell down, right? This order block. At this time, we still have a valid trend, right? At this time, we're still considering this trend as, as a selling trend. So our projection was, okay, price was going to come to this order block and just go down to create a new low here, right? To do something like this, right? But instead, price decided to take out this prestigious lower high that was responsible for this push to the downside. So automatically we know that, okay, price has changed character, right, to the upside. Now, this is a change of character. Now, since this order block has been violated, this order block now has been turned to a breaker block, right? This order block now is a breaker block. Why? Because price has violated it. So what do we expect? We expect that price is going to come back to retest this order block before it push to the upside. And look at what price did. Just look at that. Price came back, retest. Now, the reason why we didn't count this first retest was because this first retest was still in line with the trend, right? We were still hoping that price was going to go down, to create something like this, right? To do something like this. But after price broke this order block here, we no longer call it an order block, but a breaker block. So what do we expect? We expect price to give a good retest on this breaker block before pushing to the upside. And that's what price did, right? So if you actually wanted to take this trade now, you would have, placed your buy position at the top of this and then your SL just below the candle, right, of the breaker block. And then you can target whatever ratio you want to target, right? Be it 1, 2, 3, whatever you want to target, and you just place your position to that way, and you ride it to the upside, right? Depending on your risk to reward ratio. If you're a 1:1 person, you're already at TP, right? You're already at TP, right? So this is how you use breaker blocks to pick entries, right? Remember I said the market must be trending really high. If you look at this market structure, you see the momentum that price actually used to break this breaker block, right? You see the momentum that GBP used to break this other block. Sorry, this breaker block, right? So you wouldn't, yeah, so that's basically it. That's basically it. Now let's quickly, I wouldn't want this video to be long, so let's just quickly talk about the Quasimodo reversal entry, right? Let's talk about the Quasimodo reversal. So what is a Quasimodo reversal? Now, in a situation where you have a market trend this way, and then we get our break, our change of character, right? And then we get a structure like this, right? This is what we always get in the market, right? When the market is trending from the a downtrend to an uptrend, this is the type of structure we always get, right? When there is a change of character. So we are going to label this one as what? As our change of character right here. This is our change of character, our CH. And then once we have a change of character, we no longer refer to this zone as a BOS, but sweep of liquidity, right? We now refer to this zone as sweep of liquidity, right? This is still a BOS, This is still a BOS. You can say this is still a BOS, but then this particular zone here, this last lower high, sorry, this last lower low that was taken before the change of character, we now say this is a sweep of liquidity, right? Because price took all of this liquidity before changing to this other side, right? So this is a sweep of liquidity. So, and remember, we said this is our structural liquidity, right? Now, if you haven't watched my video on the market structure models, I'm going to leave a link in this video so you can have a perfect understanding of the psychology behind this structure, right? Because this structure right here has over 90% win rate if you understand the rules, right? So, and we said this is our SLQ, right? This is our SLQ. Where is it? SLQ. Okay, I don't have it yet, but these are SLQ, right? Or we can also call it liquidity graph. We can say liquidity or whatever. Okay, let's just say liquidity, right? Because price is always going to take it out, right? Now, instead of using our order block, then our order block will be somewhere here, right? Our order block will be somewhere here responsible for this push that broke this structure, right? And then we say this zone here, this low here is our protected low, right? This is our protected low, and we often refer to it as our A, right? So this is our protected low, and we don't expect price to actually take out this low. Why? Because this low took out liquidity and then it swept and then it broke structure, right? So what are we anticipating? That price is going to come back into this zone, right? And take out this low, this higher high, right? Now, price might not really retest this zone depending on the momentum, right? If price actually broke this with so much momentum, right, and also pushed to the upside with so much momentum, you don't expect price to visit this order block anymore because the buyers are in strong control of the market. So what do you want to do? You want to use the Quasimodo reversal. Now, the Quasimodo reversal is also this order block, right? This order block here that was swept. The other block that was swept before the change of character. The other block that was swept before the change of character. Now, remember, don't get this confused with breaker block, right? Don't get this confused with breaker block. This is the other block that was swept before the change of character happened, right? And now, we said for breaker blocks, it is more effective when that we said that for a breaker block to be reliable or valid, the market has to always retest it immediately after the break, right? But in this Quasimodo, you don't have to worry about that. Market can come back whenever it likes, retest on this Quasimodo, and just push to the upside. And the reason why this Quasimodo is more reliable is because before price gets to this Quasimodo entry, price would have taken this our structural liquidity, right? Price would have taken this liquidity already. So price will be satisfied with this liquidity taken. So price will react to this order block here. So there is an order block here that was swept. There is an order block here that was swept before this change of character happened, right? So we expect price to come to this zone. So what are we going to do? Instead of placing our buy position at this order block, we are going to place it at this Quasimodo here and drag take our stop loss to the low here, and then we target this high, right? And what is our anticipation? That price is going to come back to do something like this, give us a good trade, and then boom, to the upside, right? To give us a perfect trade. So this is our anticipation. So this is the Quasimodo reversal entry, right? In a situation where and one thing you should know about this Quasimodo is the Quasimodo has to be below your SLQ, right? It has to be below your structural liquidity. So instead of always calling it Quasimodo, you can just say your QMR, just your QMR, QMR. The QMR means Quasimodo reversal, just QMR, right? So your QMR is here, right? So you can label this zone as your QMR. And one thing you should always note about this QMR is it has to be below your structural liquidity, right? This is your SLQ, your QMR has to be below this structural liquidity, right? You cannot have it this way. If you have your QMR and your structural liquidity at the same zone, it is not valid. As a matter of fact, that QMR has already been activated, right? That QMR has already been activated this way. And let me give us another scenario here, right? Even without this structure, let's say you have a market trending this way. You have a market trending this way, right? And sorry, let me take this out. Let me take this out. Now, for those that don't trade this structure, right? Let's say you have a market trending this way, and then you get a break of, a change of character, right? And then something like this. Now, without the market can actually react from this Quasimodo here, right? The market can react from this Quasimodo reversal here, right? And give us a good push to the upside. So the next time price is coming back to this zone, the next price will be coming down to this zone. You're no longer using the Quasimodo, but then the other block that's here. Now, if you don't understand what the valid order block is, my last video, I talked about order block. You can also check it out. So this, right, price can then come back to this order block. Since the Quasimodo has been, retested, and price will give us a good push to the upside, right? So you can even use the Quasimodo reversal, right, to catch a continuation, right? Instead of, because in a trendy market, in a high trendy market, price will not always come back to the order block, right? It either react to the fair value gap or a Quasimodo, right? So, or a breaker block. This is why you actually need to understand what a Quasimodo reversal entry is. So guys, thank you for watching. Please go ahead and subscribe to this channel and like the video as well. I'm going to leave a quiz in the comment section, right? Just to help test your understanding of this concept. Okay, before we go, let me just show us a chart example of a Quasimodo quickly. Just look at this. This is a Quasimodo, right? Just look at this. So you see, this is the last order block. This is the other block that was broken, right? This is the other block here. This is the order block here, right? And price has not retested it. So what are we anticipating? That price is going to come back, possibly react from this Quasimodo here, give us a good trade to the upside, right? Without even visiting the order block. You can see that the order block is at the extreme here. This is the order block, right? This is the order block. This is the order block. This is the order block. So price might not necessarily come to this order block, and you're going to have a missed trade. So price might just, react from the Quasimodo and just give us a good push. So in order not to miss trades like this, what you're going to do is you can decide to be using the Quasimodo as your entry model, right? Because if price gets to the Quasimodo, it picks your trade. And if price decides to maybe even go deep into the order block, maybe do something like this, even retest the order block, it's still going to go ahead and give you a good trade, right? But in this case, you'll not be missing trades. Although when you use the order block, you're going to get a high risk to reward, right? Your RR. Let's use this order block so that you see what I'm talking about. So let's say we are using this order block, right? Let's say we are using this order block here, and we place our buy position here, and we drag it all the way to the upside here, drag it all the way to this same length, right? And then we cover this low, same stop loss, same TP. Right, this one is 3.7 risk to reward. That means if you risk one, you're going to get 3.77 in return, right? But in this scenario, when you risk one, you're going to get 9.1, right? So you're going to get 9 times the money you risk. Why in this scenario, you're going to get 3.7, right? So that's just the difference between using the Quasimodo and an order block, right? But whichever way you want it, you can use it. So guys, see you in the next video. Peace.